right now, month to month, but we'll see what happens, right? I mean, you never know when uh, some craziness is going to be injected into the market and volatility comes back flying, and we have to increase our stops there to take into consideration that volatility. But for the time being, it seems like the 2 to 3 points is an adequate amount of profit targets, and it gives us that amount, and also stops. You don't want to get yourself in too much trouble given the low volatility. So we that seems like a reasonable target, both on the stop side and on the profit side. Obviously, if you were been with us this week, we've can take there's opportunities to take a little bit more than 2 points. So it all depends on how you enter your trade, how many contracts you trade, and that all depends on each individual's risk tolerance. And those are two things that are individualized per trader. No one trader trades the same way, has same risk tolerances, has the same goals, and so we try to work around that to try to maximize your profit potential. All right. Again, if you have any questions, if you look at the chat box area, for those of you who might have missed the levels or didn't write them down, they're going to be written down in the chat box area there. Mark put them in there for us, and those are the levels that we kind of use throughout the day as a guide to our trading. We can add to them, we can subtract from them, we can adjust them, we can delete them even, depending on the price action, right? Remember, we use the levels as one source of a way of getting to some setups that we have, and also there's price action opportunities that occur once the market paints some bars, and between the price action opportunities and the levels that we give out creates the opportunities to trade. As you can see here, given the sidewinding view of the market, and it's not like I want it to be this way. It's just that the market is this way. Your opportunities have to be scaled down just a little bit, right? I mean, we cannot go create trades. We don't do that here. We kind of wait for the market to kind of give us the opportunity with its movement, and so we've been very, very quiet in how many trades. If you just use our levels over the last couple of days here, for some of you who have been coming in here, we've had maybe 4 trades, maybe 5, depending on how aggressive you wanted to be on a couple of those trades. Some of our other traders have taken our education course, probably maybe 6 or 7. Well below our average of about 4 to 5 trades. Well, not well below, but just below our average of 4 to 5 trades in the course of a day on average. And that's okay. I mean, we have to. We are dependent on price fluctuation, and if we're not getting it, we can't go create trades. Again, anybody who's stepping in here or coming in here just recently, if you bring up your chat box area, you will find the levels that are printed in the chat box area. Those are the levels, like I said, that we use during the course of a day to help us kind of guide us along, and use it as a guide. Obviously, we've had to expand those in one way or the other, maybe sometimes both ways during the course of the day when there's some volatility. But lately, because of lack of, we are that should be good for the time being. But you never know when there's going to be injection of some kind of volatility that comes into the market. You just never know, right? So that's where we're at. All right, market is kind of shifting on both sides of our pivot here. The support level on the downside is at the 76 area. market is just kind of sidewinding here, like I said. And again, if anybody has any questions, please feel free to jot them down in the chat box area. I have that window up. I'll be able to see it quicker and answer you faster if you have it up there. And definitely don't mind any questions. They're good. Help me understand. Did you understand what we're talking about? And if not, if I need to explain it more, I'm more than happy to. So feel free to ask any questions you want in the chat box area. As we are hovering right around our pivot area, so lack of any movement. Bollinger Bands are set up around 21, 22. All right, let's see here. So we had the initial claims number that came out this morning, and I said that was worse than expected. They were expecting, I think it was 640 or something like that. They came out at 710 or thereabouts. So not as good as was expected. So it just shows you the market needs the unemployment area of the market still needs to be still underwater a little bit, even though you had a good unemployment number. That came out last Friday. And today, basically, yesterday we talked about there was some intraday movement in the market, and that intraday movement you could be related to one of the. We had a lot of Fed speaks yesterday, and it was definitely one of the Fed speaks who created some volatility midstream. When everything was so quiet, nothing's going on, and all of a sudden you get one little move. And sometimes you need that little move to get us to a setup. Sometimes you can take advantage of that one little move. All of that depends on how the price action is. Everything's dependent on price action here. But the Fed governors are talking away, and they do create some volatility in the market sometimes. And that's why, even though we are very, very slow and very, very quiet and not much is happening, highly suggest you make sure you keep your stops in place no matter what the situation is, so that you can take advantage, so that you don't get run over by one person saying something that could create some crazy volatility. So we'll always keep that in mind as you're trading. We never know what's going to affect the market intraday. We just have to be aware that anything could happen at any moment, and that creates some volatility in the market, and you obviously have to be prepared for it. So we do have, in regards to that, we do have some Fed speaks today. We have at 10 o'clock, one of the governors are talking, and at 11 o'clock, the Fed chief himself, Powell, is giving a speech, which will probably maybe somewhat have an effect on us at 11 o'clock Chicago time. So keep that in mind. And there's another Fed speak at 1 o'clock. So I guess the biggest one, I mean, they all could say something. Yesterday, somebody in regards to inflation said something and created a little bit of a hiccup in the market. You get a 4-point move and you're like, whoa, something happened. What just happened? It's like, whoa. Yeah, it was only a 4-point move, but it felt like a 100-point move. But hey, because this is what happens when the markets are slow. You get one 4-point move and you're like, what I just got run over. What happened? You really didn't. So always be prepared for any news that comes out. I'll give you an example of of news that comes out unexpectedly. There was a big trader one night who was before obviously everything went electronic. We used to actually trade in a pit where people were yelling and screaming at each other and creating opportunities to trade. And they wanted to have 24-hour trading, and so how do you do that? You basically have to open up the pit at night. So there was some night trading from 6 o'clock till 10 o'clock or something like that, right? So and so once in a while, you go in there. It's very, very thin, very, very light. Just if you trade now, at night, it's very, very thin, very, very, not the best trade in the world. Anyway, the point being is that, whenever news comes out, so it was the eve of one of those wars that started. I think it was the Kuwait thing with the older Bush, and it started at night. And one of the big traders was, I spoke to him. He always traded at night. He always traded during the day. He was just loved trading. Anyway, so I saw him outside of work, and I said, "So how'd you do that night of the war that started?" He goes, "Well, let's put it this way." He goes, "Well, there was 1,000 lot in the market, and then somebody was bidding for 1,000 lot, and there was nothing going on. I thought I could scalp it for a little bit, and I was the only, I could. There's usually nobody's in there bidding for 1,000 lot at night." And so I said sold to him, and basically as soon as I said sold to him, the news of the war came out, and he goes, "Well, let's put it this way: that was the quickest $1 million I ever lost." I'm like, "Oh, okay. I'm glad I asked you how it went." So yeah, you just never know when news is going to be released. It's going to affect the market, but it does happen. It happened when we were trading on the floor in the exchange. It happens when you're trading on the screen. It happens, and you have to always be prepared. You never know when it's going to happen. It's just the nature of the beast, right? You just have to be prepared to trade no matter what the situation is. As we slowly drift down here to our 76 area, if you're trading with us, trying to see what it wants to do down here. Again, we're trying to scalp the market, looking for a couple point opportunities. And this is our first area of support down in this area here at 76. And again, whatever the situation is, make sure you keep your stop in. We are a stop hungry situation, or stop hungry place. Well, whatever. We like to have stops in there because we don't like to get run over with anything, because we never know when something's going to happen. And 2 points is a good risk level that we can handle without, really getting us run over too bad. And we can always look for the next opportunity, no matter what the situation is, right? So we slowly come drifting down here again. Nothing really much is going on. Yeah, can we repost the levels again, if that's possible for us? There they are. Okay. You're welcome there, Ed. All right, so we're just kind of working the 76 area again. Whatever the situation, this is first support level that we had. Again, whatever the situation is, no matter what you're trading or how you're trading, keep your stop in there. It's always a good situation to keep that in there. It keeps you safer. It keeps you, you feel good about putting on a trade if you have your stop in there. Not going to get run over. You know what your risk is, and that way you can just kind of trade along and find the levels, find trades that you like, right? I mean, that's what we're trying to do here. You're trying to find trades that are acceptable and trades that you know how to find on when you're looking for setups and opportunities, right? And you take the opportunity to trade those levels as we come up here to the 78. So that was a very nice trade there for you. If you got in against our first support level there with, even got filled on the low end of the bargain there. So nice little rotation. And if you have extra contracts, maybe you try to keep it a little bit, to get a little bit more out of them. Good way to start the morning here on a Thursday when things are really, really quiet. So nice rotation there off of the 76 area. Got your 3 points if you were trying to, scale out of them. Again, you scale out of positions just like you scale into them, right? So you went up to 79, so you had a nice little trade there for us. Again, all we're trying to do here is take advantage of ebbs and flows of the market. We're not trying to hold it for like 20 points. That's not what we do here. You could position trade, that's for sure. There's multiple ways of trading, by the way. I mean, just because I'm telling you one way to trade doesn't mean that it's the only way to trade or the right way to trade. You have to find a niche that works for you, right? And maybe you don't like to trade this way, but you can incorporate some of our levels to help you find your entry points and exit strategies. That's a possibility too. Many ways of trading, and don't let anybody tell you that this is just the only way you should be trading. It's not, but it's a good way to learn and to stay involved in the market and to try to, on an everyday basis, get to eke a little bit of money out of the market. And that's what we try to do here on an everyday basis. And again, all of this stuff is all dependent on how large or big you want to trade, right? I mean, this is all dependent on how many contracts you trade, but that's also dependent on each individual's risk tolerance, right? So that's an individualized thing that we work with each individual trader. Minutes from the Fed. I'll read now what some of the business headlines that I have, and that kind of relate to the market. And see what's maybe pushing some of the market one way or the other, and so we can try to understand some things that's going on. But again, as far as our work is concerned, we're trying to scalp the market. Again, how you get into them. If you get into a trade in a nice level, let's say you wanted to stay long against the 76 and you think it's going to go back up, then you just get out of some of your trades and then hold a very small amount till we can see if we can get up there, and if it doesn't, you keep your stop in there and you just get out, right? So at least you're still making money on the trade because we had a nice rotation off of it. All right. Minutes from last Fed meeting, which was released yesterday, saw the FOMC members point to a brighter outlook for the economy while agreeing to provide continued support via near zero interest rates and large monthly bond purchases. Several of them, that's funny, even noted that the recent 1.9 trillion pandemic relief package could improve the position of small businesses slammed by the pandemic, boosting consumer spending and contain long-term damage to the labor market. That builds on the last hiring surge in March, as well as the unemployment drop and business reopenings. We're trying to get 2 points minimally on the trade, and so if you got long there at 76, you're looking to get out at 78. And if you have multiple contracts, maybe you scale out at 79 also, because we did get up to the 79 area. So, and you can have a trailing stop on any other contracts that you have on, and see if you can't take it a little bit higher. But 2 points, 3 points, somewhere in that range gives us a nice profit target at this point. And as far as our stops are concerned, we're also risking about the same, 2 or 3 points. So that all is kind of, at this point, what we're looking for, because that's what the market is giving us. It's also slow. It's not, it's a reasonable amount to ask given how slow the market is and how low the volatility is. When the markets kind of improve and maybe get a little bit more volume involved or injected into the market, our stops might have to be increased to 4 to 5 points, and as well as our profit targets as well. So all of that is dependent on price action and how the markets are trading, what your profit potential and profit targets would be, as well as your stops. So again, we talk about that in our with each individual. If you want to work with us, but even if you've been a trader, that's what we're trying to do. We're just basically scalping the market. The outlook was echoed by Jamie Dimon, who estimated the coming economic boom could last until 2023 in his annual letter to shareholders on Wednesday. The Morgan Stanley, JP Morgan CEO said strong consumer savings, huge deficit spending, more quantitative easing, expanded vaccine distribution, and the $2.3 trillion infrastructure plan could lead to a Goldilocks moment of fast, sustained growth alongside inflation and interest rates that drift slowly upward. The permanent effect of growth will depend on the quality, effectiveness, and sustainability of the infrastructure and other government investments. Spent wisely, it will create more economic opportunity for everyone. Wow, that's Jamie Dimon talking, of all people. Spent wisely is the quotes that has to be spent wisely. All right, Jamie Dimon. Investors responded in kind, and the S&P's notched a fresh closing high yesterday. Stock index futures climbed further overnight, with the contracts linked to the S&P's continuing to rally, as well as the NASDAQ and the Dow. Further helping sentiment was the statement from the U.S. Treasury, which said Biden's tax proposal will generate $2.5 trillion over 15 years in an effect to pay off 8 years of the infrastructure spending. Fed Chair Powell speaks at the IMF event later today, and remember that's going to happen at 11 o'clock Chicago time, where he is going to be talking. We don't like when Fed governors or any Fed situation or any F-Day situation occurs, today being one of them. The lack of these guys can say anything, then everybody's looking at him, and then you have the people who are trying to read the tea leaves between what he's saying and what's really happening, and are they really going to do that, or are they not going to do that? So, there's too much uncertainty involved here when you have one of these guys talking, and especially if you have Powell talking. You saw the little volatility that was incurred in the market yesterday when the market, broke a little bit when somebody said something. So we don't like it when people are talking Fed BS, just stay low. Basically stay out of the market at that point. But that's 11 o'clock Chicago time. So you never know. So if you see some volatility around that time, you'll know what's going on. So here's a little case where if you did buy to 76 and maybe you put your stop in at 75 or 74 and extra contracts, right? I mean, always extra contracts, because you're taking profits, at 2 points, at 3 points, it went back down, made a new low by a couple ticks, came back up. Now you're up here at 80. Our pivot there is 82. The point is that this is how you can take a little bit more than 2 or 3 points on your trade, and it all depends on how much risk you want to take and how you exit your trades. It's all part of each individualized trading methodology, because everybody's got different risk tolerances, right? Nobody's the same here, which is great. And this is what makes the world go around, especially in the world of trading. Whatever. All right. Don't ask me to sing. Is it a song? I don't know. See, now I'm starting to talk to myself because nobody says anything to me. All right. So Fed guys talking IMF event later today, which is likely to share his views on global recovery monetary policy outlook. Investors will also be tracking the latest Labor Department update on the number of American filings for unemployment benefits for the first time. And like I said, they were expecting 680. It came out at 714 or 15. So a little worse than expected, and kind of market's absorbing. We're on our lows. We're still up, but we're on our lows. So what does that tell you? How bad was that number? Whatever. Anyway, so we'll see what happens there. It's coming up here to our blue band if you're a blue bander. Obviously, at first level, where if you're trying to exit a long-term trade here against the 76, that's where you want to get out of some. President Biden is willing to negotiate on a proposed corporate tax increase that he intends to help pay for his $2.3 trillion infrastructure bill. I'm willing to listen to that. He replied when asked if he considered a lower corporate tax rate then the 28% he was planning on proposing from the current 21% of the Republicans have balked at the proposed level of spending, the planned priorities, and tax increases, while some companies like Raytheon are forecasting a big dent to their bottom line if the package goes through in its current form. Responding to the concerns, Biden defended the broad scope and size of the infrastructure plan. On the idea of infrastructure has always been involved to meet the aspirations of the American people and their needs, he declared, and it is evolving again today. Besides such additional infrastructure projects as fixing roads and bridges, the Biden plan includes broadband network, child care initiatives, and raising wages for the healthcare workers. All right, so it all sounds good. Well, sounds like a good deal, but let's see what'll happen. Who knows? Well, that's when the market likes anyway, right? The market just liking it. The market starts here at 8:30 Chicago time, so 9:30 Eastern time. We can repeat the levels for you. These are the levels that we gave out when the market opened up. That we use those as a guide for trading S&Ps. There they are for you in the chat box area. These are the levels that we gave out when the market opened up, prior to the market opening up, and these are kind of a guide that we use. We came down here to our first support level there at 76. No, we were long there. We were long there at 76. That's our first support level. So we bought them down there at the 76 area just about 10 minutes ago when it dipped down there. Market opened up less than half an hour ago, so no, we're not. We don't jump on any position. We kind of let the market kind of tell us what to do. So we're actually a little bit long there at the 76 area. If you're holding on to stuff, your stop would be at 74, and then obviously you can try to take a little bit more than 2 or 3 points on your trades if you are so inclined. I just said the stop's at 74 and your target is right around here. So we don't have any support levels for the bonds because unfortunately they don't trade very well. Technically, they seem to be a one-sided trade. They don't bounce. They don't do anything. They just decide one way they're going and they just go. So 2-point stop minimally and a 2-point target minimally, but you can obviously expand that if you trade multiple contracts. So yeah, look, you're talking to a bond trader. I had started my career in bond market, in the bond pit, and I love bond trading, except over the last, since the financial crisis when the government decided to, and they still do, all these buybacks. Are we done for the day? No, we're not done for the day. Ever since they started with these government buybacks, the market basically is run by the government because there's so much. They're got their toes in all these bonds. So they trend better. Yeah, they do. I mean, but that's not what we like to do here. It's a one-way trade there. So if that's what you like to do, then that's what you should do. But you could take some of the concepts and ideas that we have and maybe jump on a trend if you like momentum trades and stuff like that. But yeah, but as far as scalping opportunities are concerned, there's not really a good scalping opportunity for us. No, we're not. Are we done for the day? No, we're not done for the day. We trade here for till about morning hours, first 2-3 hours of the day. We feel that those first few hours of the day give us good opportunities to trade. And we don't like to trade in the late afternoon. The market gets a little bit thin, even less volume than there is right now, and it becomes more one way. And like I said, we like ebbs and flows, so the trade later in the afternoon gets a little bit, somewhere in that range. A little bit before, a little bit after. It all depends on volatility. Yeah, so if you were long down there against our 76 area and you have multiple contracts and you're holding on, this is how you can take a little bit more. As we're coming up here to our pivot, this is where obviously you would want to exit some of your trades if you did manage to stay long. And is it possible you could stay long? Absolutely, it's possible. If you had the 74 stop and you scale out of some trades and keep your stop, or even now you can adjust your stop so that you can lock in some profits. If I were trading, I would put a stop in at the 78 area if you are if you still have any contracts left, or if you don't get out of some here. The levels are generated through the work that we do and through the technical analysis that we do and we teach. Some of our traders like to fade the pivot the first time to it. That's correct. So, but this is definitely where you would actually take some of your profits. But yeah, so if you are trading our pivot and you're looking for it, this would be a little bit of a sale up here. And you're getting a nice rotation here off of that pivot rotation here off of the 82. So if you did take that trade, some of your pivot players, you can get paid off here very nicely. So we said that would be a target for any longs, and also some of our traders like to trade, like to sell or buy the pivot depending on the situation. But the first time to it, and this was a nice little trade here against the rotation there against our pivots. So nice trade if you did fade the pivot. It was good ask there, JSS. Your pivots are different than the pivot I see on NinjaTrader. Right, they are, because we do our own work here. We don't. I don't even know what the NinjaTrader platform uses, but most of the other platforms, I guess, if you use whatever, they have equations, and and everybody uses them. We don't. We kind of do our own work here. We generate our own opportunities. We look for our own trades. We don't use any mechanical equation or way to figure out whether it's a pivot or whether it's another support or resistance area. We do the work ourselves. And it's some of the lessons I learned when I was trading on the floor helps. And I used those experiences and the opportunities that we had there and transferred the ones that worked to the screen here, and that's what we use. So it's not. I don't know what NinjaTrader's pivot is. I'm not. I don't have their platform up, and I don't use their stuff. But I mean, they're very good, though. I worked with them for a little bit when they were testing their platforms out. And way back in the day, I was working with them a little bit, giving them suggestions and ideas. That was a long time ago. Now that you bring that up, but they were very nice there. All right. So again, we are just kind of floating here. If you did, if you are I'm sure. Okay, that's good. Yeah, I would probably had NT -1 when I was working with them. They had the scrape model that they were testing when I was a young whippersnapper. Yes, you got that right. When they actually asked me for help. Anyway, we suggested out of any longs there against our pivot area. And obviously, if you got short there against our pivot, you're doing okay. So markets are kind of being nice to us the last few days. The green band, yes, that's correct. But that's not where our pivot was 82, as you got into levels earlier. Obviously, the green band there was almost at 83, but 82 was our pivot, so it was a nice little trade there if you did jump on. Again, we are just trying to find price action opportunities that give us a chance to scalp the market 2 to 3 points, and potential for more. Obviously, if you did buy the 76 there and it kept your stop in at 74, and you targeted maybe to pivot or a little bit more than 2 or 3 points, then you got them. And now we're kind of flat right now, right? It could go retest it, whatever, but I'm out. I'm flat. So sometimes it's good that I talk. I don't watch what the market's doing. Sometimes you have to do that, right? Because if you're watching the screen, you get swayed by some of the movements. So. Difficult to trade between levels. Patience. Yes, that would be. Is that a statement or a question? And if it's a statement, it is for sure the proper statement. If it's a question, I highly agree with you 100%. So either way, you're right. Yeah, you definitely need to be patient, especially when the markets are this slow, right? And when they have just gotten to, where's the VIX? Can somebody tell me where the VIX is? 17.19. Wow. They're really dipping it down. Not surprising. Why the 3 screens? Well, we have a 5-minute on the right ES screen. In the middle there, we have an hourly ES screen. And on the left, we have a 30-year bond chart. At the end of the day, I still believe that bonds tell us where markets might be going, and I traded the bonds for a long time. And I used to trade the bonds actually here. When I used to trade the bonds because they used to trade well, but I don't trade them anymore. So it's just the force of habit to have the bond market up there. But we use the 5-minute and the hourly to kind of maybe give us backing for some support areas that we have that we might want. Sometimes they tell us different things and explain different things to us. So we highly recommend that you have reasons to trade and not just jumping in the market to jump in the market because you think the market's going up or down. We highly suggest you have reasons to trade and layer your reasons through some technical analysis or whatever work you have that you're comfortable using, and that way it gives you more confidence in entering your trades. No, look, I'm the bond market. I don't lean on any market to give me any direction. We just kind of trade our level, and sometimes the bond market will give you a longer term direction. Not so much as an intraday observation. Well, we are. What is the problem? What does that have to do with anything? What is the thought? The reason was to trade for a living. Well, what do you think I've been doing here? I don't understand the question. I guess if you can explain your question, I'll answer it for you, but I just don't understand the question. Yeah, you do. Right. Oh, so the reason that I'm entering my trade is just so trade for a living. Yeah, but you also, there's many opportunities to trade here. You can find 100. We want to show reasons to trade so we can have confidence in putting on a trade at this moment in time. I trade here every day. We trade, and we can have a lot of trades in the course of a day, or you can find the trades that you are more comfortable finding. So you have to be able to be patient and wait for the opportunities, and then also have reasons to trade. To enter into a trade just because the markets are moving one way or the other is not a good reason to trade. You need to find a good technical reason, a reason that's worked for you before, maybe some of the levels that have done worked for you in the past because you understand why they work, and then enter your trades. We don't enter trades just because we feel like entering trades. We need to have reasons to trade. So trading for a living and trading because a reason to put on a trade are two different things. I mean, you're asking me two different things here. One thing has nothing to do with the other. I mean, in my mind, I don't know. Maybe in your mind, it does, but. All right, we're coming back here to the 76. Again, I wouldn't touch 76 this time around. I'd probably look for our next level of support down at 69. If you were trying to get short, the rotation back up to the 82 level would have been a good entry point for you to get short there, which was our pivot that we used, so everybody knew that. Settlement price is at 70. Okay, settlement price at 70. Gold is up above 1749. My run, that's good. You know, again, if we don't trade multiple contracts here, gold, oil, grains, only because we feel we could focus in on one market to give us a good feel for what the market is looking for. So it gives us a good idea of what we're trying to trade, what moves the market. Like we know today that Powell's going to be talking at 11 o'clock, so we have to be a little bit careful. When you trade some other markets, there's a whole bunch of variables that we are not. I don't know about a lot of other markets. You know, grain market. There's a lot of grain reports that are due when they come out. I'm not. I wouldn't even know how to know what they mean when they are released. So I'm just kind of focusing on one market and try to do well in this one instead of focusing on multiple markets. So that's my theory here. But it doesn't mean that other traders can't trade other markets. I mean, that's for sure. Yeah, some people like to correlate the NASDAQ with us. And, you know, you can tell, though, the NASDAQ did have a little bit of a retraction to, you know, they were dumping the NASDAQ a lot more than they were dumping us a little while ago. And so if you were trying to follow that, or, you know, it was kind of hard to do, but. I don't. He was telling me that the Ninja calculation for the pivot was different than mine, and I said I don't use any calculations to figure out our pivots. And he was just explaining to me that my pivot was different than Ninja's pivot, and so. I was explaining to him that, yeah, I don't use any calculations to figure out the pivot. So you're right. You didn't misunderstand. I don't use any calculations. He was just telling me that I'm assuming that the Ninja pivot was a calculation. That's all. And then any new resistance above is very subjective to a lot of different ways. Maybe you could use a Bollinger Band. Maybe you can use Fibonacci's. Any level that's above here is going to be above it to make a new high. I should say it's going to be a very subjective number. And so I'm always careful by telling people especially when we start making new highs like we have been lately, that you have to keep your stop in very tight to make sure that if there's going to be a continuation rally on these new highs because somebody got short or whatever, that we don't get caught. So any level above the new high is a very subjective number. I would, yes, would be looking to get long there at um, 69 area. All right, but the market just kind of drifting around here. Again, this is very, markets are slow these days, which is fine as long as we understand that. That's okay. Oh, would I sell the blue band? Well, I wouldn't do it this time around. I would have rather done it the last time when we got up to. It's a little bit more riskier there, Casey, this time around. Casey, you're starting to try to find. You're trying to find trades. Pretty impressive. That's good. It also tells me you're bored. All right. So I would look down at the next support level, which we have is 69. And like somebody said, the settlement price is at 70. Just putting it out there. Resistance. I guess we could go retest the pivot again. Question is again, we don't. Obviously, it could work, except I like the rotation to any level or any other opportunity there the first time we get to it. So it's a little bit more tenuous this time around. We're trying to find trades that we like, and again, it all depends on how much risk somebody wants to take, and that's an independent, not independent, but that is a individualized concept here. I can't tell one person that the trade is going to be good or not good. I just will tell them the risk, and then they have to determine for themselves if they want to put the trade on or not. I mean, that's what I would. I mean, I would just think it's a little bit more riskier this time around, but it could go retested. I mean, it's an obvious retest, but then I can also see a little buying opportunity there above the 83. So it's very iffy. I'm in the don't know what to do around their area, so that's when I would just stay out. Dodgy? Yeah, maybe. It's like if you had hot coals in your hand and you don't know what to do, you're just flipping them around. And you're like, what should I do? What should I do? What should I do? How about when you don't know what to do, don't do. That way, there's no do anywhere around. You'll be okay. Okay, that was bad. That was terrible. All right, let's see. Let's see what else we can talk about here. That would be correct. I'm not trading the chart, but the levels. Well, I do get the levels from the charts, so you know, I don't know. Am I or aren't I? And the price action opportunities do come from the charts, so can't really do one without the other. All right, we seem to have gotten to a little bit of a range here. Not too surprising. This is what's been happening lately, which again is fine as long as we understand that this is what the market environment is and the trading environment is for a moment. This is what we have to consider, and the expectations have to be kind of drawn down a little bit. Obviously, it's kind of hard to trade this back and forth, going nowhere fast kind of trade. But it's not even a range trade. It's just making a new low by a few ticks and then rotating back up. So kind of a little dodgy, maybe. Skittish, not going anywhere any fast. So this is like the no trade zone that I like to say. A little support down. The next good support is down at 69. Upward resistance again. I want to maybe say the pivot there at 82, but I think if we get above 83, we might rotate back. I mean, the 82 trade was probably better the first time to it. I don't know, about 20 minutes ago. It becomes a little bit more touchy this time around. I would rather look at the 87, our first resistance on the upside, as our next good resistance level instead of the 82. If we're going to go back up there, there's a good chance we're probably going to go through. I don't know we're going to go back up there, or I don't know if we're going to go through. I'm just saying there's a good chance it might. So in this little area here, we just have to be patient. Again, the objective here is to make money and not to just trade. If you want to keep trading, you could do that, but you're just going to create a lot of commissions to our broker friends, and I don't like our broker friends because I don't like the commissions that they take. So we try to minimize that factor, the cost of doing business factor. I know that if I was sponsored by any firm that they would not like me to say that, but I'm not sponsored by any firm, so I can say whatever I want. So yeah, that's that. Don't trade if you don't have to. All you're doing is creating a lot of commissions. I mean, look, if you're profitable doing it, you can make money. That's great. But when it gets into these little ranges here, it's tough to trade. And again, if anybody has any questions, thoughts, comments, ideas, please jot them down in the chat box area. For those of you who maybe have come a little bit late, we're going to repeat our levels in the chat box area. Maybe. There they are. Those are the levels that we gave out at the beginning of the day. We kind of use those as a guide. We can add to them, subtract from them, delete them. It all depends on the price action in any given moment in time. The markets are moving. They are a living thing, at least when they're open, and we can make adjustments to them if we need be. So if that's the case, then we just are kind of just being a little bit patient here and waiting. We had our first support level there, got triggered there at the 76, and it had a nice rotation. And then we've just gotten into this little bit of a range here, this 8 point range. It's really not going anywhere fast. Kind of hard to get too involved in that. So let's just step back and wait for the opportunities to present themselves. Some of our traders maybe took the sale there against our pivot, the first rotation back to it. Could have been another opportunity there for you if you were a little aggressive. And two trades to so far today in a very narrow, tight range. Not the worst idea. Not the worst thing at all, I don't think. Obviously, if you want to trade a lot, now is not the time. You have to save your bullets for the time when markets are ripping around and moving, and you can have some. You can trade then. Trade a lot. You're going to have many opportunities then to trade. The trick is to be patient and wait for those opportunities instead of just jumping in there now and trying to create something when there's nothing going on. But if we can make a little bit of money as the markets are kind of drifting and making us a little bit of money, we can't complain, right? Well, until the markets come back, you can, and they will come back. I mean, if anybody thinks that this is going to be trading like this, it'll come back. Don't worry. Something will happen. It is what it is. We just have to be patient and wait and listen to me talk, because that's the best thing ever. You know how much I love to talk, so that says also, how could you guys go wrong? Those of you who are new, I don't not like to talk as much as I do. Trust me. I'd rather be trading. I'd rather be talking about trading and the trades or what to look for or what opportunity we have next, but it's just not. It's not happening, which is fine. It is what it is. Anybody have any commentary? Make sure you put them in the chat box area. That's what we like as we kind of wait and see what the market wants to do. Again, it seems like it's just range bound here and kind of just going nowhere fast. That's funny. That's funny. Do you have any PPE loans for traders? That's hilarious, actually. I don't know. I don't know. I can't say that I would know that answer to that. I don't know. I'm sure there is. Why not? I don't know. Maybe not. I have no idea. That's funny though. That's very funny. Again, if you're A little bit of resistance in this area, but anything above 83, you want to be out of any shorts. If you want to maybe looking for a trade, it's one of those. But at least you know where your stop is. Anything above 83, I want to be out of any shorts. If you're looking to get short around this little area, it's a little bit of a sale, but it's not a strong sale. And if you want to take the trade, you have your exit strategy there above 83. So it's one of those things that you have to determine what do you want to do. Like I said, I try to explain the risk, and then it's up to you to try to say, do you want to take the trade? Do you not want to take the trade? I'm here just to try to explain risk, and then hopefully then work with individuals to try to maximize your risk potential, your profit potential based on your risk tolerance. All right. Again, like I said, it's a little bit of a sale up here. If you're a little aggressive, it all depends on what you're doing, and how much risk you want to take. And you have your exit strategy there above the 83. Otherwise, let's just be patient there and wait for our next good resistance area would be up around the 87 area. All right. So we have Powell going to be talking here at 11 o'clock Chicago time, and Bullard is going to be talking here at 10. So these guys are going to be chit-chatting. Like I said, you just never know when one of them is going to say something. So keep that in mind. Definitely by the time Powell is talking, we should be long gone. Absolutely. There is no reason to be hanging around when he starts chit-chatting. All right, we're drifting back up here to the pivot area, 82. Remember, I said anything above 83 out of any shorts if you're going to be aggressive. And so Bullard's going to be talking now at 10, and then Powell at 11. and then another Fed's peak at 1. Again, not good when you want to. No, not good, not good. So careful if you're going to be trading later on. As long as you know that these guys are going to be chit-chatting in the background. Hey, look, it's Masters starts today. There's nothing wrong with going to watch the Masters for a little bit if you're into golf. Or playing golf. How's that? Nothing wrong with that either. I don't have anything. I said I was flat. Yeah, you might be. It might be a little bit. Might be a little bit wet out there for you there, Timmy. All right, like the next good resistance on the upside is going to be at the 87 area. That's our next good resistance level. Patience is important. All right, again, we've come back up here to our pivot area there. Right there at 81.5 and climb off of it here a little bit. Again, anything above 83 out of any shorts. All right, just kind of again, kind of doing its thing here. Range bound, trying to extend a little. Maybe go back and retest the 87 area or not. Obviously, kind of trying to stay below our pivot here, but we gave you an exit strategy there above the 83 if you were looking for a trade. All right, coming up here, butting up against our pivot. So again, if you're going to take any of this trade, your exit strategy has to be above the 83. It looks like it's trying to uptick here. I don't know. Who knows? All right, again, we're coming back up here to our pivot. I'm looking for maybe a little bit of a push here above the 83. All right, market is trying to inch up here above the 83. We're going to be looking for the 87 as our resistance area. Support right now would be around the 80 area. Oh, what happened there? Never know when these guys are going to wake up and do something. Well, we a little support down here against the 80 area if you're looking to, again, just keep your stop in. I don't know what just happened. But whatever it is, just keep your stop in there and trade the market if you're going to buy. If you wanted to buy this 80 area, it puts you to sleep, then all of a sudden does something goofy. But hey, again, it is what it is. But thought we were going to uptick there and just kind of just flushed it down here. Somebody got a little hiccup. Now we're just coming back down here again. A little bit, I mean, market maybe a little bit bullish, but again, it has to bounce off of this level here. If it wants to hold its bullishness, who knows? Well, just kind of hanging up here now. See, again, very, very quiet trade, no follow through, just kind of hanging around. And we got to do the same thing. We just got to hang around and wait, right? We can't really force the market to do anything for us. And this is what happens when it's so slow like this. We want things to happen, but we just can't create them. All you could do is just kind of, if you find a trade, put the trade on, put your stop in, and just let the market kind of play itself out. Otherwise, if this is too slow for you, there's all, we had a nice trade this morning. Just kind of just wait till, wait. It's got to be patient and wait. No reason to keep trading if the market's not going to give you any opportunity. Like I said, the worst thing you want to do, or the last thing you want to do, is just give more money to the brokerage house. That's the last thing you want to do. Not the worst. Not it's okay. I mean, I'm not a fisherman there, Chad, but okay. All right. So we are for those of you who we do have our education course that we have in addition to this trading room, and the education course is going to be we conduct our classes in this venue. and that's going to occur today, later on this afternoon at 1 o'clock Chicago time, 12 o'clock Chicago time. So anybody that's going to be around there, we just want you to know that where class is going to be. So Chad and Peter and whoever is part of the course we're going to have our class later on this afternoon at 12 Chicago time. And like I said, we use this venue because we like to use the live charts to help us with explanation is what we're trying to do. And that's going to be happening later on today at 12 Chicago time. So those of you who are part of the course, just letting you know that that's going to be happening later. The Brad, who will be coming on in a few minutes here, he, if you give us your contact information, he'll give you a call and explain things to you. All right, we're kind of holding the 79.80 area here, kind of a little bit bullish right in this area. If you are going to buy it right now, if you wanted to buy it, this is where you would buy it, and look for to hold here. Otherwise, just keep your stop in. Anything below 76, you want to be out of any longs. As you can tell, the ranges are getting really tight. But like I said earlier, if you put the trade on and just put your stop in and just see what happens. If it's not what you want to do, then just be patient and wait for the 87, the next level of resistance we have. And if you don't want to take any of these price action opportunities. So if you want it to be a little bit, this is a little bit bullish right in this area, but again, anything below 76 out of any longs. All right, we're just kind of a little range bound here again. If you're looking, this is a little bit bullish, but we have to hold above the 76.
Hey, a couple quick programming notes. Give me a quick sound check. Let me know my voice is coming through okay, that you can hear me. And Elt, can you hear me? Hey, Casey, thank you. Hey, Neil, I guess for everybody out there, welcome aboard. We've had a number of guests coming in over the last couple days. Thanks for attending. This is an opportunity for you from a price action trading perspective to learn how to trade and develop what we call consistent profitability based on the services that Sol provides. It's an educational service. That's obviously the direction that we want you to head in and hold on to. There's 3 levels of service here. The first level is coming in as a guest, so welcome guests. The transition would be into a monthly, which is to be part of Sol's Zoom room on a monthly basis. The receivables in the Zoom room are as follows. You get to come in on a daily basis, concentrate on the morning session. You receive Sol's proprietary scalping levels, his zones. He gave them out this morning right around 9:30 when he sets them. Let's just talk about that for a second. For those that missed his levels this morning, oh, okay, great. Thank you for posting them. They've been posted. So right now you have an opportunity to read, not only have it put out to you in audio, Sol's pivot, which was 40.82. 40.82. He had supported 76, 69, 63, and 57. His resistance at 87, 93, 41, even 41.06. Now, there are traders out there from the trading floor, the trading pits in Chicago. There are experienced traders out there that just want Sol's levels because they are different. I know that Sol was mentioning before that a lot of these levels are spoon-fed by software providers based on calculation, based on various other methods. We find those levels useless, and I'll tell you why. Because as Sol had mentioned, that everybody's using those levels. So you have a complete cluster, and traffic jam at levels that are given to traders based on various platforms out there that are spoon feeding things to traders. Traders, unfortunately, new traders, experienced traders, what have you, are reacting in some form or fashion to what's on their screen, and they get caught up in the traffic jam. They may know or think they know or have a good idea, or the market may go there. So let's say they had a particular area that they were looking at. They have done their calculations, their homework, their innate sense, and they go into a trade, whether it's a short trade, fade trade, or momentum trade, long trade, at a particular price, and whammo, the traffic jam happens, and then after it's all said and done, and most people get shaken out and lose money based on their stops or fear, they end up seeing the market go where they thought it was going to go, which is the shame of it all. And I think that's what keeps people coming back to trading that are, just average at it and are breaking even all the time. So what's the difference and what happens here? Why is this different? Why would you spend your time here? Now, that's a very good question. We let you come in and witness it for your own, let you ask questions on your own. We don't filter, and I think that that's interesting when it comes to what is happening here. So why you would come in, A, would be Sol. Saul's a 25-year veteran trader. He's a CME Group floor member. He's actively scalping currently. So what he has to say is important. There's no getting around that. When he comments on an area, he comments on a trade, he comments on the market, it's important to hear from him because he has survived and excelled for 25 years or so on the CME Group trading floor, trading up against, in my humble thought, my opinion is that he was trading up against the best traders in the world of all different trading types. He mentions that often, that individual traders have different styles, things that he couldn't do that they could do, but they couldn't do the things that he couldn't do. And one of the things that Saul came up with to survive on the floor, and I think I gave a little bit of a history yesterday, but the long and short of it is that Saul went down to the floor with his nest egg. He had 3 months to pull it off, or he had to go packing and get a job, and he pulled it off. In the beginning, it wasn't easy. In the beginning, he was losing money. But then he picked up on the concept of how the market sets levels and then revisits those levels and makes change at those levels. And he had a memory for where those levels were. He had a technique of setting those levels that were different than the spoon-fed stuff and the calculation that is used by other traders. So his levels are special. His levels are paid for by various individuals on a daily basis just to receive his levels. They'll come into this room, they'll get his levels, they'll hang out, and they'll trade. They pay for that right by being in this service, by paying for this service. And we have structured it into what we call a Zoom trade along, where you have the ability to hear, chat, and see, learn, to trade, and what we call it trade and earn versus trade and lose, or trade or break even, or trade and do trading. You know, the act of trading is pretty easy. The act of being a good trader, a disciplined trader, similar to a professional gambler or a golfer that is trying to get the lowest score they can based on their golf game. There are techniques. There are ways to do things and ways not to do things. There are distractions that you shouldn't be distracted by or distracted by anymore. There should be a focus, on in this case, the price action level of the trade and Saul's trading zones or levels. That's as simple as it is. So coming into the service, that's what you get. You get professionalism. You get the opportunity to ask questions and get decent or real answers. You have Saul, who is doing the same thing you are, if you so choose. He is working around his levels or zones. He is putting trades on and taking them off for his own count, so he is at risk. And he is here on a daily basis to help you develop a skill set and help you hone that skill set and help you develop consistent profitability if you have what it takes to do it. And that's the invitation was sent. People have come. Saul's been doing this for a while, and he is available for you to pick his brain and to be able to turn your trading into a start as a new trader or a seasoned trader that's trading better than they were trading before, having come in here. I mean, how crazy is that? So this is an open opportunity for you to sign up for Saul's service. We had a couple of people ask us what you get for his service. And that's what you get if you're lucky enough to get the friends and family part. So it's usually $379 a month, and people are willing and happy to pay that. If you get the friends and family, that's an extra bonus for you. And it really was set up this way recently to capture individuals that want to be separated from the free, and get nothing crowd to the, wow, I can't believe I'm getting all this for $25 a week and I'm glad to pay him, and I'd pay him more. And there are individuals that pay him more because they are confused by the $100 a month rate. So don't be confused by it. Just pay it and be happy and be part of the family. Anil, are you like a... now we have two Anils in here. We've got Anil S and Anil G. But this is focused at Anil S. So Anil S, what do you want? What is it that you're looking for? Let us know, because it sounds like you're asking all those loaded questions that we have heard for many years. And it either signals you out as somebody to kick out or a troublemaker, or or there's a real reason. Would you ever pay anything? Probably not, but I'd like you to, and I think it would benefit you to do that. And or would you, like to just keep dancing around the issues and asking weirdo questions, or questions that you think are important but are questions that just are fraught with I don't know what it is, antagonism. So I'm going to send out to everybody now an opportunity to sign up for Sol's Friends and Family. If you choose not to, that's great. If you're not ready to, that's fine. There's one thing about these services is that you don't have to stay here. You can find something else to do. I mean, obviously, I want you to stay here. Obviously, I was laughing the other day with somebody about if you were at a bar and you saw somebody that was really great at their craft and you were interested in that craft, would you go over and buy them a drink? Would you go over and try to pick their brain? Would you try to get them to teach you? And Sol's in that camp. He gets embarrassed when I say that, but hey, what are you going to do? So yes, so I'm sorry. So there's 3 levels of service here. We've got individuals coming in as guests. You transition into friends and family at the $25 a week rate, which is a gift, right? It's a nominal fee. It's a token of the information, or the token for the information that you are receiving. Not quite a Bitcoin, but could be. The next level of service, once you sign up for the friends and family, is have the opportunity to talk about your setup, the chart you're using, the whys you're set up a particular way, and why you should be set up a different way. And that's all great information for you as a trader trying to make a go of trading. And then you have the opportunity to talk about Sol's Intensive, where he takes a select group of traders under his wing and he teaches them in private Zoom with live charts, trading education that centers around price action trading, the entries, exits, and stops of price action trading, and the whys. And the whys are, why do you enter here and not there? Why do you place your stop here and not there, so you don't get shaken out as often? And what's your exit strategy on a price action trade, which should all be included. And then it's a focus on how to set the levels so you can do it on your own, so you don't need Sol. And then it's a matter of a relationship going forward. It lasts a year where you are able to go into class sessions with Sol, get tuned up or filled in areas that you're still unsure of. And then you have the ability to have your trades critiqued based on a particular day's trade. So let's say you were doing trades today. You get to the end of the morning session. You're very interested in finding out. You let Sol know, hey, this is what I did. This is the levels that I took based on the zones and the levels. I went short or long. This is what I got out of the trade. This is what I thought I should have gotten out of the trade. This is where what happened in the trade. And what's great and which is unique and which is a super opportunity for traders here, new or experienced, is that Sol is also at risk at these levels. He is also at risk based on his entries, exits, and stops. So when you ask him a question or he gives you information, he's giving you information because he was in the fight. He was in the battle. He was in it like you are. Anil, no. But this is Anil S. So we get that question a lot. It's interesting to me because when he's giving you his levels and he's giving you the levels around the cash open, you can now be a live witness on whether his levels are any good. And if his levels are different, in most cases, right, every once in a while it could be close, to the levels that are spoon-fed by software, and the market is moving at these levels, and you can identify that for yourself by being, aware, paying attention. But yeah, he doesn't go to that length to prove anything to anybody. And thank you for being here, and see you later. So anyway, so Kurt, that would make sense. Yes. So the friends and family is the morning session. Level 2, because you're part of friends and family, if you can have a trading consultation based on what you're doing. And then that leads to the conversation if you're interested in having Sol take you under his wing like you're a nephew or a niece and teaching you firsthand his trading methodology and how to apply it, and then support you in that application as you apply it. So that's really the long and short of it. Just based on the commentary before, it's very interesting to me because you've got people that you can never please, and we don't really try to do that. But I think that you can never please them, and that's not the way the world works. Is you do your best to please, you do your best to deliver the information, and then you deliver the opportunity, and it's up for the individual to make that opportunity their own. And everybody's an individual. If anybody promises you that you will make money trading based on your efforts trading, you got to run away, because everybody brings to the table different capabilities, different temperaments. Everybody's different. So price action trading is a real focused discipline where the rubber meets the road at the price change and Sol's levels. Now, that should give you an advantage to sweep away all the other distractions and just focus on if you can make money scalping the market. Sol's looking for a minimum trading profit on each trade of 2 points plus. If it goes to 3 points plus, 4 points plus, he'll take it. But he's very happy to bank his money and be happy with taking his money off the table. It's a business for him. It's like surgery. It's like a surgical strike, and he gets out of the way and he takes his money. He doesn't we have to remember also Sol is human, okay? So Sol strives to come in every day without a predetermined thought of directional way the market's going to go. He also strives to not get emotional on his trades or in his trades. In other words, get sucked into the greed part when the market is going past his 2 points and into the 3 points. He'll look to take it, but if you look at charts, you'll see that it seems like, and just witness it for yourself, when you look at your charts, if you go back, you can see 2 points readily available. A little tougher on 3 points, tougher on 4 points. Usually you get a retrace or a shaking out opportunity that can take your trade away. And I think we've all seen that happen. So here, Sol is focused on being prepared with his level, deciding how that level should be treated at this moment in time, and then what to do. Nothing. Step in and step right back out. Stay in the trade, milk the trade for more points, and get out and bank his money. So, JT, this is a good question. So, the zone that Sol looks at for his trading starts around the bell. So our bell, and I talk Eastern time, your bell would be different based on Pacific time. So the bell here is New York time or Eastern time. The cash market opens in the S&P 500 E-mini at 9:30 Eastern time. So if you can judge, and I think Mark had given us the time. Now Mark's from California. So he'd be in your time zone, and he had laid it out for me yesterday, as far as, when he gets up, what he does during his day, which I thought was pretty cool. And what it gave him was freedom. Now, this gives everybody freedom. And what I mean by freedom is just earlier freedom. So, if you're getting up at, I think it was 7. Is it 7 a.m., Mark? I don't know if you're around. So that's 6 a.m. there. Okay, so he gets up at 6 a.m. We start here and open up the service. We start up a little early, but, the communication and action starts around 9:15 Eastern time. So that would be 6:15 your time. And then at 9:30, the cash market opens, and then we go on from there. So this is the tick-tock of Sol's trade. Now, Sol's in California, so I'm in New York, and I'm talking Eastern time. Sol is in in Chicago, and it's an hour earlier for him. So I like to just talk about one time zone so everybody can adjust. And we have individuals that come from all over the world. So they are, some of them have the afternoon, some of them have different times during the day. But the window here for making money and concentrating in your trade with the idea of making money is 2 hours or so after the morning bed. Not 2 hours after, within those 2 hour. The 2 hour period. So 9:30 is 10:30, 10:30 is 11:30, and you should be done for the day. In other words, you should be good enough, right? Sol's levels, his zones, this technique, right? If you can develop it, if you can concentrate on it, if you can make it your own, okay, then you really only need to spend those 2 hours, maybe 2.5 hours. And that depends, obviously, on the trading day. It depends on momentum and follow-through. But that's the zone that he targets for momentum and follow-through as an advantage to him in his trading, and he looks to be done within that time frame. Now, if you decide to learn Sol's price action technique, his entries, exits, and stops, and how to set his levels, you could trade the afternoon session depending on market movement. There are times when you can extend your trading day. But the point here is, how does an individual like Sol, or an individual like yourself work for 2 hours, 2.5 hours, and bank your money for the day, whether it's $100, $200, $300, $500, $1,000, whatever it is that your risk profile allows you, and the number of contracts that you put on, and are skilled enough to grow from one contract. Well, you should start out in one contract in simulation until you're good at it. And I'm talking about really good at it based on Saul's methodology. And then transition into one contract at risk and see how you do and get good at that. And then ultimately raise your contract size. And one of the nice things about this service is that let's say you get, and let's say you sign up for $379 a month. Well, $379 a month is nothing for Saul's levels as far as his, the worth, if you can put a worth on it, right? That his levels are worth its weight in, I don't know what the term is anymore, because what are levels weigh? I don't know. But the point is that his levels are pretty darn good, and we allow you to experience that so that you can appreciate them, and you're happy paying for them because they're rewarding you based on your trades. And in the beginning, it's rewarding you based on being able to follow and understand and start to understand what happens in and around these zones or levels, and how you can learn to capitalize on it based on your trades and control your stops and start to milk your profits. So his trading class that he does, he teaches you how to set the levels and what to do with the levels so that you can do it on your own, and you can work those 2 hours, those 2.5 hours. I do mention from time to time, if you're not done as a trader before the noon hour Eastern time, then you should talk to us. You should talk to Saul and ask him what you can do. And obviously it's price action trading, it's his zones, it's his levels, it's his commentary, it's his demeanor, it's how he teaches, it's how you relate to him. And then it's really all about you, because you are the trader, you are new or experienced, and you now want to be in a position to know how to enter a trade and why you're doing it, why you're getting out of it right away, why you're staying in the trade, and have somebody to answer those questions for you from your side of the equation. So the deliverables in the Zoom trade along, first off is Saul and all that brings. Second off is his levels and the opportunity around those levels, and he gives them out right around the cash open, and you get to go through the morning session with him. And that is a service that costs a fee. It's as simple as that. If you're paying $379, great. If you're lucky enough to pony up and get the friends and family at $100 a month, that's great. And if you get the $100 a month, it rolls over. Okay. Hey, Chad, I can send you out the link. I don't know if you can copy. Just go to zoomtradealong.com. Zoom, ZOOM, tradealong.com. And that'll take them to a web page where they can register. It's funny, I forgot I had that up there. Hey, Rocky, welcome. Yes. That is perfect. ZoomTradeAlong.com. And that really is a opportunity to sign up to the Zoom Trade Along. It clicks you into Zoom, when we're open, and then it also sends you an email on a daily basis to come in, as a guest. And then we hope people will take the next step without badgering them too much to take the initiative to sign up for Sol's Zoom trade along as a patron. I've heard patron before. So raise your hand if you would like me to send you out the information on signing up for Sol's monthly to get the special friends and family rate. And if you decide to do that, that's great. And if you want the additional time and information afterwards, we'll be glad to help you. Be glad to take you down the merry path of price action trading and the merry path of looking to help you get better at your trading, whether you're new or experienced. Hey, thank you for raising your hand. I will send that information out to you. Hey, Mark, thank you for raising your hand. Hey, James, thanks for raising your hand. I'll send the information out to you. I think you can also find it in the chat area. So it's www.zoomtradealong.com. So JSS, are you joining us? Hey, Rocky. Hey, Rocky, how are you? Hey, Carlo, I'm supposed to call you. Just let me know if this is a good time. I know it was after 11:30. Just let me know if you're around. Brittany, how you making out? Alex P. Hey, Alex, you ready to go here? Don S. I know, Ed, you're waiting for tomorrow. Edwin, thanks for yesterday. Eric. Greya. Gray, you've been on the fence for a while. What's going on with you? Let me know back in chat. Got to be careful the bot doesn't toss you out. The bot is a hard character. The bot sees that people have been in, they haven't paid, and it gives them the shove right into Zoom prison. And I'm not sure if you want to be in there. Hey, Julie, JT, James. All right, I'll be in the background. I sent out some information to those that raised your hand. Thanks for signing up. And if you like what we're doing here, tell your friends. And thank you, Chad.
All right. We can tell here that we're trying to keep you a little long there. We gave you an exit strategy there below the 77 and telling you that we think we might rotate up here a little bit. If you did that, then you're doing okay. I never got stopped, obviously, and you've had a couple opportunities there to actually trade a little bit of a range there, as long as you had your stop in there below the 77. That was definitely given by some price action opportunities that we look at, how we found that level and how we decided that that level might be able to hold for us. If you partook there, then patience here prevailed, and definitely giving you an opportunity here to make a nice getting along there and hold on. And then we're going to have our target. If you really want to try to hold on here, if you made a few dollars being long there a couple times, maybe you're looking at the 87 as a target for yourself. that would be a target for us to also get out, and maybe that'll be our first resistance level on the upside. So if you did partake there, again, I mentioned just before I took a little bit of a break there that it was going to be one of the trade today is you get a position, put your stop in, and then you got to let the market kind of do its thing, because it's just not going to do it for you right away. And if you did get long against that level, you had a couple opportunities there to scalp it, and even try to stay long now for this move here going forward. Again, everybody's got different risk tolerances. The question was asked before about what my track record is. It all depends on how many trades you decided to take. I've given out a lot of trades today, and some of you might have taken it, some of you might not have taken it. The objective here is not to talk about which trades are, what my track record is. It all depends on everybody's which trades you've taken. I just don't know which ones you've taken. That's the thing. All right, we'll be here in the background. 87 would be a target if you're trying to stay long. Otherwise, just kind of hanging out, waiting for the 87 as our first resistance area. See what happens up there. Patience is important these days. Get back here in a bit.